All right, we got the data we were looking for, that PCE data. It's coming in cooler than expected, which is honestly not what I was expecting. I was expecting hotter than expected data. Core CPI came in hotter than expected, so I figured core PCE would come in hotter than expected, and that was not the case. However, while there might be a battle going on between bulls and bears that the bulls have certainly won, they have managed to string 7 days of declining VIX in a row for the first time since March 31st of March of 2021. And this is something that happens on average once a year. It's happened, I believe, 34 times in the last 30 years, or 30 times in the last 34 years. It's a very infrequent event. It's happening right now. Well, that might have happened. I don't think the war has been won by the bulls. And I say that because this is the largest dislocation between fundamentals and the market that I've seen. And this is not fundamentals like, oh, I expect, this future thing to happen in the future. The fundamentals are the Fed's dot plot. The phrase is, don't fight the Fed. The market is completely mispriced and completely disregarding the Fed's dot plot. So much that there isn't even a single rate on the entire yield curve that is above 5%. However, rates are currently 4.75% to 5%. And the Fed, every single Fed member has indicated that we're getting another hike. Every single one has indicated that we're getting another hike. They're not saying I want to hike more, or I want to do this, or I want to do that. They're saying, look at the dot plot. The dot plot hasn't changed. The dot plot came out after the banking situations. And there it is. It's indicating one more hike. They're saying that despite the PCE, both Collins and Williams said that. And Collins said, even if we get a cool March jobs report, still another hike. So the fact that not a single rate is below 5% is mind-boggling, because you can just go do a reverse repo at the Fed and get that. You can go get that 4.75 to 5%. And it's going to be 5 to 5.25% based on what I'm seeing, based on what the dot plot says, based on not fighting the Fed, not trying to speculate. I'm not trying to speculate on, what might happen. I don't want to do that. I want to stick to the facts, the fundamentals, the actual dynamics. That's what I try to do. And the vast majority of the time that has worked. There's been one other situation where it didn't, and it was very painful, but we ended up coming out on top. And that's why, one of the reasons, I'm not drawing that conclusion simply because it worked in the past, but I've seen this before. In 2021, end of 2021, Omicron occurred. There was a lot of people selling oil, massive declines in the stock. The price of oil stayed the same. People thought Omicron's going to kill oil demand. Oil supply and demand dynamics, they stayed firm, but stocks fell precipitously. And then just a few months later, a few weeks later, even, stocks reversed. It was the first day of 2022. That was part of our tremendous outperformance last year. So I've seen the market try to speculate, try to be a little too savvy, try to dislocate itself from the fundamentals a little too much. And from what I see, that's what I see right now. I'm seeing that not just with regards to interest rates, which are tremendously low. The Fed doesn't want them low. And I'll give you one last point on the Fed and interest rates before I get into individual stocks and talking about those fundamentals. The Fed doesn't want interest rates low. Williams just said we are slightly restrictive. We need to have restrictive monetary policy in order to bring inflation down. That is objectively true. That is how you get inflation down. However, none of the Fed members besides Bullard have said the fall in yields is making their job more difficult since the last FOMC. Bullard said that. Bullard is speaking Monday at 8:30 a.m. Now, I'm not making any predictions. I'm not saying he's going to say it, but I have a hunch. I have just a hunch that he might try to move the market. None of them have successfully moved the market. Kashkari moved the stock market a little bit yesterday, but none of them have moved yields. And they don't care about the stock market. They don't. What they care about are treasury yields, because That's how you get inflation down. They are saying, if credit conditions tighten, that might help them, reduce demand or whatever. But if yields are going down, that's not reducing credit conditions. That's implying that there's plenty of lending and plenty of people willing to buy bonds. The banks can just go out and lend money and then sell it into the market and make some money. And that's what they're going to do. And that's not going to have the effect the Fed wants, and the market is currently overpricing. So the bulls might be winning the battle. They surely are. But it's hard for me to admit defeat in the war. I just can't do it. I just can't admit defeat in the war. I cannot admit defeat in the war. And that brings us to our next point, stock fundamentals. Both Microsoft and Apple are well above, and Nvidia are well above their levels of late 2021. When interest rates were near zero, the Fed was easing, actively buying bonds in the market, and these stocks were growing at double-digit earnings rates, double-digit earnings growth. That is no longer the case. All three stocks I just mentioned had double-digit earnings decline, and are trading well above historical multiples. Nvidia at stratospheric earnings multiples. Apple has secular tailwinds. They've had a massive earnings bump, experienced massive earnings growth because they experienced a COVID situation that benefited all tech stocks. However, as recently as today, Huawei CEO said what Dan Niles and we have also anticipated and saw in 2019, which is that the iPhone upgrade cycle is lengthening. That is not good for Apple. That is a secular headwind. So, as far as I'm aware, stocks and fundamentals have detached themselves. And as painful as it might be, this is what we're dealing with. I'm not ready to admit defeat in the war yet. It's been painful, believe me. If I let price dictate my sentiment, I would flip-flop hard right now. But I can't do that. I can't. Gotta fight on a little bit longer, see what happens. We've had 7 days straight in the VIX, in the red. We're very low in the VIX. Don't want to capitulate at the wrong time. 7 days red in the VIX in a row hasn't happened in over a year. So, have a good weekend. We'll see what happens next week. We'll see what happens over the course of the next quarter. That's today's video. Congratulations to the Bulls. You guys won the Q1 battle in astonishing fashion. But you lost a lot of battles last year. And I think you might have picked the wrong battle. So, it's a war. We'll see what happens. And until next time, after Bullard, peace out.